Hi, if you're new here, I'm PPE, and this is the Peso Pro episodes where we talk about money management tips and peso tricks. If you haven't done so yet, please hit the subscribe button below. It is not a secret, credit cards are probably very polarizing as a topic. Some, like me, like credit cards because you can actually amass a lot of points and perks and even miles from your favorite airlines and get to travel for virtually free. But there's also the other side of credit cards, which makes it a very slippery slope. People who cannot manage their credit cards actually end up with balloon debt because the credit card interest rates are very high. Up until late last year, the credit card interest rates would be somewhere in the range of about 3 to 4% per month. Meaning at 3% per month, that's a whopping 36% per year. However, in November 2020, the Bangko Sentral ng Pilipinas, in partnership with the Credit Card Association of the Philippines, actually struck a deal to have a cap on the interest rates by banks on credit card debt. This went down to only 2% per month or a 24% per year versus the old 3 to 4% rate. While this is a significant amount of savings, almost about half of the old rates, 2% per month is still very high if you take into account the fees, and a 24% per year interest rate cannot be beaten by any regular investment. Credit cards, if not managed properly, can be a big pain and headache for most people. So here are a few tips and actual practical next steps to see what you can do if you are already in this situation. We're gonna talk about two sets of advice. One is how to try to prevent getting into this scenario in the first place, and second is to talk about what can you do if you are already in credit card debt. Let's talk about the first one first, which is prevention. There are a few tips that I will share with you on how I personally manage credit cards to make sure that I don't get into this debt spiral. Number one, and probably the most important thing to do, would be to pay in full and on time every time. This is the only cardinal rule in credit cards, and if you do this, meaning you plan your expenses well, you plan your income and set aside the amount that you have to pay every month for the statement amount that you have, then you're gonna be fine. You're gonna be, in most cases, winning the credit card game, and you will be maximizing the rewards and points that your credit card has to offer. Ito yung ginagawa ko for all of my cards. At the moment when the statement arrives, you can actually pay it in full. You don't have to wait for the due date. Or even if you do, just make sure that you pay the full amount when the due date comes. If you're doing an online banking transaction, give it a few days, typically about 2 to 3 working days buffer, so that the payment that you did in your online bank to another bank can be properly recorded before the due date. Another tip would be to not even think about the minimum amount due. The minimum amount due can be differently calculated in different banks. But typically, it's a percentage of your total amount due plus any of the monthly installments that you have. So for example, if you have 1,000 pesos per month in installment, that will be automatically added into the minimum amount that is due for that statement. Why do I say that don't even bother thinking about this amount? This amount is basically the bare minimum required by banks so that your account will continue to be in active or in not in default kind of mode. Which means the card is still active, it won't be cut off as long as you have enough credit in the account still, but all of these amounts that you did not pay as part of the remainder will all earn interest anyway. Let's take, for example, a very simple case. If you had 30,000 total amount due, typically without any installments, your minimum account balance would be somewhere around 3,000 pesos or about 10% of the total bill. Some people think that it's okay to pay the 3,000. Anyway, it's the minimum amount due. If I pay this, my account won't be in default. It's actually a factual statement, but that wouldn't help you at all because come next month, your balance, the remaining amount that you did not pay because you only paid the minimum amount due, will now be subject to the 2% interest rate, and it will continue to compound month on month as long as you do not pay it in full. The last tip that I had in prevention is actually if you are paying this and if you are having a hard time matching your cash flow, because essentially when you deal with credit cards, you're not even touching any cash. And sometimes because you feel like there's money in your bank account, you feel like you have more money than you actually have. Some friends actually go to the extreme, and what they do is they still charge their credit card to take advantage of the points, but immediately after the transaction, they actually do a bills payment transaction to their credit card. This may be a bit tiresome, so one version of this is you can probably do a check on your online banking statement. Even if they are not yet billed to you, you can pay the balance of the week by the weekend, so that what you will do is you're eventually just paying off chunk by chunk the amount that you're supposed to be billed at the end of the month. This isn't the best from a time value of money standpoint, because you're essentially paying earlier than when you're supposed to. But if you're having problems managing your cash flow, this is a great way so that you can still maximize the points and miles that you can earn from your card, but you're also not seeing a balance in your bank account anymore, which prompts you to think that, okay, you've actually spent the amount. That is one way for you to actually, at least for the majority of your costs, already pay it off even before the statement. And you will be able to see that all of those payments are reflected when the next bill comes, and then you just pay the difference for any balance that is still remaining. Those are some of the tips to prevent you from a debt spiral in credit cards. But what happens if you're actually in one right now? What can you do so that you can set up a plan so that you can actually get out of this, and in the process try to save from the interest that you will be paying your credit card? Tip number 1 would be to check if you have access to any personal loans. Yes, I'm saying that you have to assess if you have access to other personal loans to be able to pay off your credit card. As of this stage, I am assuming that since you have a credit card balance, you don't have any spare cash. If you have any spare cash, by all means, pay your credit card right now. If you are strapped for cash and if you don't know what to do and you're just keeping that balance in your credit card, the chances are, if you have somewhat okay credit history and if you have accounts with other banks, or if you have a cooperative at work, or maybe even your work offers some sort of a salary loan, check the interest rate on that salary loan or any personal loan that you can get from other institutions. I did a quick comparison versus the 24% per year that your credit card will charge you. Some personal loans can go to as low as maybe 8 to 12%, depending on which bank you apply from. This is already about half of the interest rate that you will get charged in your credit card. If you get 8%, that's only 1/3 of the total annual. And take note, what gets charged in credit cards is a monthly compounding charge, which means that every month, pag may pinatong sila na interest, meaning let's say you started the loan with 100 pesos, next month, they will tack on 2% as an interest, making it 102. The next month, that 102 becomes the base of the interest, meaning 102 plus another 2%, and so on. It's a compounding effect month on month. If you move it into a personal loan, you can set aside the right amount every month because you can actually negotiate the terms of the personal loan. Let's say, for example, you can only afford 2,500 per month, and that would mean that you would have to pay the loan, for example, for 2 years. Instead of paying it 2,500 per month in your credit card and have the compounding effect of the 2% per month, what you can do is negotiate a personal loan with another entity and use the proceeds of that loan to fully pay off your credit card, and then just diligently follow the payment schedule of your personal loan. In this way, most cases, you will be able to save on interest, and you can actually come up with a payment plan that is suitable for the amount of cash that you can spare. Again, conventional wisdom tells you, or what sometimes even your parents or friends will tell you, is that huwag kayong mangutang para magbayad ng iba pang utang, which is actually true. But if you are already in a messy situation, sometimes taking out a cheaper loan is better than being okay with the credit card debt that you currently have. You have to check interest rates and do a comparison on the total amount that you will pay. But in general terms, you will be able to save at least half on interest, and this can stop your credit card from accumulating more, while you follow a predefined payment plan with the personal loan. A second option, if you're already in a debt spiral with your credit card, would be to actually consider transferring your balance from one card to another. This is a different form of the first step. Typically, credit card companies are in it for your business, meaning what they want to do is for you to course through your transactions with them, because this is exactly how they earn the margins that they have on the transaction. Every time you swipe, na gamit ng card nila, they earn a percentage fee from the gateway processing fee that they have. Which means the more transactions that you put into that card, the more percentage commission or percentage fee that they earn from the gateway use. Now, what other banks are doing, especially if you have multiple cards with different banks, they will actually offer you a facility called balance transfer. What this essentially does is, let's say Bank A is your current bank where you have a debt of say 100,000 pesos. Bank B is offering you a balance transfer program which says you can transfer up to a certain amount of your credit limit. Let's say you have enough space for that same 100,000 with Bank A. What you can do is you can talk to Bank B and tell them, okay, I have this 100,000 balance in Bank A that is outstanding today. I want to transfer that balance over to you, Bank B. Bank B would be more than happy to get that from Bank A because that's more transactions under them. What they would do is they would offer you a payment plan that you choose. Typically, this is somewhere between 6 to 48 months. So what you can do is you can actually talk to Bank B and say, hypothetically, if I transfer 100,000 from Bank A to you, what will be the interest rate that you can give me and what are the terms that I can choose from? In some cases, when the bank is under a promotion or they actually want more business from you, they will offer very competitive rates. I have heard from one bank before, maybe about 1 to 2 years ago, that they're actually only offering about 0.7% per month add-on if I move balance from one bank to another. If you do the comparison, this new bank is only 0.7 add-on percent per month versus the original bank that was charging you 2% per month. That's already about a 65% reduction on the interest rate that you would be paying anyway. So in this case, what you can actually do is then talk to Bank B and tell them, Bank B, gusto kong ilipat yung credit card balance ko from Bank A to you. Assuming you give me these terms and you allow me to pay in X number of months. Make sure that when you compute, the number of months actually help you to match that with your cash flow, and obviously make sure that you now pay the loan in these equal amounts every month because now you have a plan to pay it through. Obviously, if you don't pay in Bank B, then the whole issue continues and that sort of beats the purpose. But in this case, you're able to save from interest rates from Bank A to Bank B just by talking to two banks. The process can actually be very simple once you finish all of the application steps. Bank B would technically pay off Bank A. In Bank A's eyes, the loan has been paid, so you should see zero balance. And you would see in Bank B your statement reflecting whatever you talk to them. Let's say you said 18 months at 0.7%. You would have the exact payment as an installment and then you would carry on paying with Bank B, but now you have effectively saved on interest rates and you now have a plan across the 18 months to finally finish the loan. The third and last one is more for serious cases of credit card default. This is actually a program from the Credit Card Association of the Philippines called the Interbank Debt Relief Program. Or basically, it's an amnesty program among credit card companies. This is only true for very, very severe cases and there are specific eligibility criteria. But what you would essentially do is talk to your bank, the bank with the highest loan in the credit card outstanding, and tell them that you want to apply for the IDRP. The IDRP is exceptionally useful if you have multiple debts in multiple credit cards because this consolidates all of the debts into one. Then, they give you preferential rates from 0% to 1.5% depending on the specific case. This is subject to the approval of the Credit Card Association of the Philippines and the partner bank. I will share with you the list of partner banks where the IDRP is actually an option right now. The IDRP has very specific eligibility criteria, so it's not open to all. However, if you're already meeting this criteria, you're in seriously need of help. So the IDRP may be a good option for you. The IDRP is open to Filipinos only, and you must have at least one card in 2 of the participating banks. The unpaid credit balance per card must be a minimum of 10,000 and should have been outstanding for at least 6 months, with a total of at least 100,000 across all of your cards. The applicant's age as of the time of the repayment of the full program should be less than 65, and if you are beyond 65 years old, you would need a guarantor with specific requirements. You should also not have filed for another IDRP claim in the last 6 months, and they would also check your transaction history, and there should be no intentional misuse or abuse of the credit card, including but not limited to gambling, luxury purchases, and extensive travel. There are certain documentary requirements that are needed, which your bank should be able to guide you with. The preferential rates and the terms being offered do not come without any consequences. All your credit cards, be it overdue or not, will be blocked and cancelled. If you have any miles or rewards points, those will also be forfeited. You also could not open any credit card account until you have fully paid the loan, and you will be kept in the registry, and that can be used for any credit assessments in the future. If you pay 2 or more months in delay or in default, all of the banks that are participating in the program will be notified and you will be placed in the blacklist. The debt restructuring program or amnesty is very, very helpful, especially if you have multiple kinds of credit card debts. And this can be a good way for you to get out of it as long as you follow the terms and you personally commit to paying within the confines of what was approved. Those are the 3 ways that you can use to be able to pay off credit card debts if you are already in a debt spiral. I hope those are helpful and those provide you with a sense of control and options that can help you, 1, minimize the interest that you are paying already in your credit card, and number 2, really come up with a plan so that you can actually and finally get out of it. It's not gonna be easy, and in most cases, it's gonna take time, discipline, and a lot of self-control. But with a plan in place, you should be able to feel a bit more comfortable, a bit more confident that you can actually deliver on this because you can see the light at the end of the tunnel versus keeping that balance there and paying small amounts only to be eaten up by interest rate charges. I hope this was helpful for you. If this was, please hit the like button and hit on subscribe. We talk about multiple personal finance topics and we hope to share with you more tips for different cases that may be true for you. If you know of someone who might benefit from this video, feel free to share and also hit the notification bell so that you're notified for the next video. Thank you once again and I'll see you again in the next one.